Hi everybody, it's Terry Ryder from Hotspotting, and this is my once a month special feature, the live Q&A, which gives you the opportunity to ask me your questions about real estate issues or about real estate locations, real estate markets, anything at all to do with residential real estate across Australia. Whatever you have on your mind, if you'd like to pop your question into the comments panel, it'll pop up on my screen and I'll do my best to answer it. So please give me your questions for the next hour or an hour and a quarter. Usually go a bit longer than an hour because there are so many questions. I'm here to answer as best I can. While we're waiting for the questions to come in, thought I'd refer to a few issues and some of the research data. As you obviously will be aware, most of you, we've seen considerable improvement in real estate sentiment around the country since the 8th of May, starting with the federal election, and following on from that, a series of other fortunate events which have helped real estate generally speaking, and has led to an uplift in sentiment and certainly an increase in activity from buyers around the country. The changes that were foreshadowed by APRA just after the election on the 18th of May, and a few days after that, APRA foreshadowed that it was going to relax some of its criteria relating to how lenders are required to assess borrowers for real estate. That's recently been confirmed, and it's now effective immediately, so lenders no longer have to assess borrowers assuming an interest rate of 7.5%, which was obviously ridiculous because it's way in excess of what the interest rates that most borrowers can get in the market. That's been confirmed, and at the same time we've had 2 official interest rate reductions, part of which has been passed on by lenders to borrowers, which means that the borrowing capacity of most people has now increased. According to some figures, there's been an increase of about 14% in what the average person can actually borrow as a real estate buyer. That means that I think the average household, from memory, some of the figures I've seen in the last few days, the average borrower on the average income, the average household on the average income can borrow $70,000 to $80,000 more than they would have previously, and that's without factoring in the impact of interest rate reductions. So it's become easier for people to get loans to get into the real estate market, and they can borrow more, and the cost of money finance is less than it was. So a lot of things in favour of buyers at the moment. We're starting to see the impact of that show up in some of the data. We're seeing a steady week-by-week improvement in auction clearance rates in the major cities. I could just refer to the latest data, which the preliminary data for last weekend. Across the capital cities, the preliminary auction clearance rate was 70%, and Sydney was pretty close to 80%. Melbourne, a tad over 70%. Now, that's a continuation of a trend over the last, say, 4 or 5 weeks, where clearance rates in the major cities have been gradually improving week by week. And that's clear evidence that the real estate consumers are responding to the improvement in sentiment and conditions. Easier to get money, cheaper to get money, no longer have to worry about Labor's policy on capital gains tax and negative gearing. And of course, we've also got the now legislated income tax cuts soon to be having an impact on people's hip pockets as well. So lots of things are in favour of buyers at the moment, and we're starting to see that translate into increased activity from buyers, higher auction clearance rates, and there's also evidence now of a turnaround in price trends. We've certainly seen over the last, say, 4 to 5 weeks, the rate of decline in prices in the 2 biggest cities has got less and less, and then it's bottomed out. Now we're starting to see evidence in the sort of weekly and monthly indexes of prices starting to nudge a little bit upwards in Sydney and Melbourne. So according to the figures out actually today from SQM Research, the rolling month index. Sydney's improved, Melbourne's improved a little bit. Brisbane's improved a little bit. Perth has actually, according to these figures, actually improved more than any other city. Perth has actually been in decline while Sydney and Melbourne were rising. So it's further evidence that the Perth market is recovering and starting to head into positive territory. Adelaide's improved a little bit. Hobart's up a little bit in monthly terms. Many of these locations are a little bit down in annual terms still, but the trend is for improvement and correction. We've also seen in these figures that are published today by SQM Research that the annual rate of decline in Sydney house prices and apartment prices has reduced. So prices are not falling at the same rate in annual terms, but in monthly terms there's actually been an increase. Same in Melbourne. Melbourne at one point was down about 10% in annual terms. Now, according to these figures, it's 5%. So there's been quite a dramatic improvement there. So it's just we're starting to see a gathering body of evidence of improvement in the data relating to sales, auctions, clearance rates, the weekly and monthly indexes on prices. And as time goes by, I think we're going to see more and more evidence that the markets in the biggest cities have turned around, they've bottomed out, and we're now starting to get back to a situation where prices are growing a little bit again in the bigger cities. We certainly don't expect it to return those markets to the boom times. That would be unrealistic. It simply means that the series of fortunate events that have happened over the last, since the middle of May, has brought forward the bottoming out of those markets. The correction phase appears to be drawing to a close, and we can now expect to get back to a phase of perhaps minor or moderate growth in those markets, and some of the other cities are going to do better, and beyond all that we've got regional centres which have got very strong markets with rising prices at the moment. Okay, so please let me have your questions. Number of people have joined, but as yet nobody's punched in a question. Once we get underway they tend to come thick and fast, so please. Chris has commented, so it's time to go shopping for real estate. Well, it's a generalisation, but in general terms, yes, it is. If you've been sitting on the sidelines, watching and waiting, wondering what's going to happen, it's probably about time to get off the sidelines, to get off the fence, and start to get active. And it depends which market you're targeting, of course. Some of those regional markets I mentioned are rising strongly. Hobart's been very strong, but perhaps past its peak and starting to taper off a bit. I'm expecting bigger and better things in Adelaide. We published our new edition of Top 5 Adelaide Hotspots report today, and I think Adelaide's going to go from strength to strength as the impact of all these positive events starts to feed through into markets more and more. We're just seeing the first signs of it with the auction clearance rates and the weekly and monthly price indexes, but we're going to see more evidence because it will take time for people to really feel the benefits of the interest rate reductions. People aren't yet feeling the tax reductions, the tax cuts that were legislated recently in the federal parliament, but gradually those will be felt in real monetary terms, and that's when we're probably going to see the biggest impact in real estate markets. Leanne is asking for my thoughts on Springwood and the Blue Mountains of New South Wales, mentioning that I've rated a consistency market in the price predictor index. Okay, so let me just key that into my trusty iPad here so I can Springwood, New South Wales, just get the latest data on what's happening in that market. So I'm looking at some core logic figures on the Springwood market in the Blue Mountains, Leanne, and it shows that there's been a small decline in the median house price over the last 12 months, but the figures do suggest that long term, that market's been a pretty good performance. Average annual growth rate, that's the average over 10 years, has been 7.5%. That's a pretty good growth rate. So it's been a solid market. As the Blue Mountains generally has been a pretty good performer over time. It certainly benefits from its proximity to Sydney. But those figures indicate that there's been some decline in the last 12 months. Beyond that, it's not a market that I've sort of studied closely recently, so I can't really give you a lot of definitive information about it. So down about 3.5% in terms of its median house price in the last 12 months, but both a small number of apartments in that market, but it's mainly a housing market. 155 sales according to these figures in the last 12 months, and the average annual growth rate over 10 years, 7.5%. That's a pretty good performance, even if in the past 12 months it's dropped a little. It's been a solid market, and that's not surprising, because the Blue Mountains generally have done pretty well as a lifestyle, hill change market, very close to Sydney. So please, more questions. Greetings and highs from a number of people, but nobody's asking me a great deal at the moment, so please type in your questions. I'm here to help if I can. I just mentioned a moment ago that we've just published our new edition of the Adelaide report, the Adelaide Top 5 Hotspots report. It's a market that I think investors should be more interested in than generally they are, and I think as we go forward and more and more people start to realise what that market has to offer, that city has to offer, I think we're going to see investors interested in buying there, because I think the economy is stronger than people realise. There's a lot coming up in the Adelaide economy that's going to have positive impacts on real estate, and it's really the value for money proposition that's appealing for property buyers, particularly from the bigger cities. It's very affordable. The rental returns are much better, and I think there's good prospects for growth. Earlier today, I did my hotspot of the week, and I focused on a particular market in Adelaide, which was the Charles Sturt local government area, which starts very close to the centre of Adelaide. Some of the suburbs of Charles Sturt are immediate neighbours of North Adelaide, and then it extends west and northwest from there. And that's a very solid market, quite a sort of middle market. Medium prices in the various suburbs ranging from the 400,000s up to the 900,000 for some of the beach suburbs, which are part of that local government area. But lots of credentials, and some of those markets have shown double-digit growth in their median prices. Some of those suburbs in the last 12 months have grown 11, 12, up to 15 or 16%. Although more mainstream, the majority of the suburbs have had growth of more like 5 or 6%, but it's well above the average that's been published in media about the Adelaide market, and generally speaking. Sam is referring to having bought some land in, I guess, Truganina. I think that's what you mean, in Melbourne, for investment purposes. Should I build a single-storey house or a decent double-storey house on that? It's a little bit hard to answer that, Sam, without knowing a whole lot more. You've got a 350 square metre block, Truganina. A future station, I assume you mean a train station, is proposed in the area, new school and childcare proximity. Well, if all those things are coming to the area, that means you're going to tick a few of the infrastructure boxes, the essentials that you would like a property to be close to, like public transport, schools, etc. But as to whether a single-storey house or a double-storey house, I mean, it really depends on what the numbers tell you, Sam, in terms of what it costs to produce both of those types of dwellings, and what the market is saying you could realistically sell it for. And then you know what your land cost was. You need to get some numbers on what it costs to build different types of dwelling on there, and then perhaps get engage an independent valuer to tell you the likely market selling price for the different possibilities that you could build on that land, and just see how the numbers stack up, and which gives you the best return, the best profit, based on what the costs are and what their likely selling prices are. But I can't sort of give you a generalised answer, because the answer will depend on the block and your situation and local circumstances. So there's no one right answer to that. You just need to do the sums, do a little bit of research. Chris is saying, Terry, you've mentioned that Adelaide is affordable. How affordable is that market? Well, I suppose probably a way of illustrating it is maybe to do some comparisons with Sydney or Melbourne. If you go right across the Sydney metropolitan area, you're unlikely to find any suburbs with a median house price much below 600,000 these days, even with the recent price correction. Even the cheaper end of the market, so median prices, 600,000 and above for houses. Middle market in Sydney is median prices around $1 million, I suppose, and the top end is above 2 million, 2 or 3 million median price suburbs. In Adelaide, there are a number of suburbs, particularly in the north and the local government areas of Playford and Salisbury, where median prices for houses are below 200,000, and certainly a number of suburbs up in that area in the 200,000s. So that's the bottom end of the market in Adelaide, like a third of the prices for the bottom end in Sydney. Middle market in Adelaide, the pricing is actually below the bottom end for Sydney. So if you're starting to get the middle ring suburbs, quite good quality suburbs with lots of infrastructure, tick a lot of the boxes in terms of shopping and schools and public transport, etc. Not far from the centre of Adelaide, and many suburbs in that category would have median prices in, say, the 400,000s and the 500,000s. Equivalent suburbs in Sydney would be, more than double that. There are some $1 million suburbs in Adelaide where median prices are above $1 million, but not much above, and not many of them. So you could say, as a broad rule of thumb, that pricing in Adelaide compared to Sydney and Melbourne is at least half, and in some cases less than half, particularly the bottom end of the market, where as I mentioned, you've got some suburbs with median prices around 200,000 and a few which are below 200,000 for houses. It's the most affordable housing anywhere in capital city Australia. So it becomes pretty attractive buying, and in those cheaper areas, the rental yields can be 6 or 7%. These are obviously down market areas. You need to keep that in mind, and some people have a bit of an aversion to that, a bit of a stigma about it, but nevertheless, they are some wonderful opportunities in the Adelaide market to buy very affordably, particularly if you're coming out of places like Sydney and Melbourne and comparing the pricing there. It's great value for money. You just need to believe that you're going to get some growth. In Adelaide, and I believe there will be growth there. I mean, there's growth already. I've just illustrated it with some numbers for the suburbs of the Charles Sturt local government area in Adelaide, where some of those suburbs have grown by more than 10% in the last 12 months. Those aren't isolated examples. There are plenty of other examples like that across Adelaide. You've got to dig behind the generalised data and find those growth areas. And in the new Top 5 Adelaide Hotspots report, which we published today on the Hotspotting website, we list the 5 areas that we think have the best prospects for people to buy well, with prospects for good growth looking into the future. Carson, hi Terry, just want to say a big thank you. Not a lot of Adelaide real estate information out there, but you're doing great. Thank you. Well, thank you for acknowledging that, Carson. You're right, there isn't a lot of information out there, and you're probably referring to media, mainstream media, like our major newspapers. I mean, Adelaide just completely flies under the radar. It barely rates a mention. Media tends to obsess. Most of our major media comes out of Sydney and Melbourne, and they're pretty much self-absorbed and obsessed with themselves and their own backyards, and they tend not to give a great deal of mileage to cities like Adelaide, which deserve greater coverage, because it presents an opportunity as well as some pretty good value for money. Because a lot of people are asking the question now, well, where next? Sydney and Melbourne have had their run, obviously no longer booming, been through the correction phase. Where can we turn to for growth? And a lot of people who tune into sort of the major newspapers are just completely unaware that there's lots of growth markets around Australia, but they happen to be in the smaller capital cities that don't get much attention, and many of them are in regional Australia, which gets almost no attention at all, and certainly no coverage in our major newspapers, partly because the people writing the articles, well, when I say writing the articles, they're basically recycling press releases that are sent into the newspapers. They really don't know anything. They're not experts. They don't do any work. They certainly don't do any research of their own. They just recycle press releases from the research houses. And so, yeah, great deal of misinformation out there, and you're not being well informed about those markets where you might otherwise be showing an interest where you're aware of them. Chris is saying definitely we'll be buying that top 5 Adelaide Hotspots report. Chris, I do recommend you do if you're interested in property investment, because it just gives you some interesting possibilities and options. If you're interested in investing in real estate, you're looking for growth markets, and you know, like a lot of people, you probably don't want to be paying Sydney and Melbourne prices. You want to buy affordably. Well, a city like Adelaide really does give you lots of options, lots of really good options where you can do that. There are other places to consider. I think Brisbane has prospects to do better, and certainly a high level of affordability compared to the biggest cities. Perth is moving into a recovery phase. Just looking at these numbers that came out today from SQM research, showing that in the last month, according to this index, the median price, the weekly pricing index for Perth houses and for Perth units has increased more than any other city in the country, according to these numbers, and just confirms what I know to be true, that the Perth market is on the cusp of a recovery. It's been threatening to recover for maybe the last 12 months, a little bit stalled by the first events in the first half of the year, such as the federal election, which put a bit of a brake on everything. But now that's out of the way, markets like Perth can start to move forward. We're certainly seeing evidence that vacancy rates have come down, rents are increasing. Now there's some evidence here that we're seeing pricing, generally speaking, rising. And so things improving there. So those of you sort of watching, there's a link there for the new report out today, the top 5 Adelaide Hotspots report. If you click on that, it'll take you through to where you can get that report. And I think it's one of the better reports to get at the moment, because it really is alerting you to a series of markets where there's growth prospects underpinned by real things at prices that most people can afford, and pretty good rental yield. So worth having a look at. Okay, Linkar, what is your thought about putting a granny flat on investment properties? Well, generally it can be a good strategy. It's a very general question, but generally speaking, it's something worth considering if it's allowed. You know, if you have a house, sorry, things are moving a little bit oddly around here. Okay, there we go. If it's a house on a block of land that allows that, you've got to check with your local council. It can be worth considering, because it can potentially give you a second income off the one property and increase your rental return. But you've got to check what's allowed. Different states have different rules about that. And in some states, the rules say that the granny flat has to be occupied by a family member and of the occupants of the main house. But it differs from state to state. So that all needs to be checked out. Then you need to look at what it's going to cost to build the granny flat, and then do some numbers on what the likely rental return is going to be, and is it going to be feasible? All those things. I mean, I can't answer that for you. You've got to do that research yourself, and I would urge you to be willing to pay a little bit of money to get expert input on that. A lot of wannabe investors kind of skimp and avoid spending relatively small sums of money on good advice and good research information, but willing to spend a heap of money on a piece of real estate. It doesn't make any sense to me. So be willing to pay for some good advice, get some expert input on that. Talk to local buyers agents, local property managers on and just build some knowledge about what the likely outcome would be, Linker, if you followed that particular strategy. It could work out very well for you, but if you don't do the research and get the proper numbers and good quality professional input from people who know about these things, you might end up with something that costs too much and you don't get the return you're hoping for. So just be careful how you go about it. Do the research, spend a little money on advice, and you'll probably get a pretty good outcome. Chris is asking, which city would you invest in, Brisbane or Adelaide? Like so many questions I get, Chris, there's no one right answer to that. It depends on the individual. For me, well, I'm based in Queensland, so right now I've got a choice of where am I going to go next to invest in real estate, and my choice is actually personally Adelaide. I just think it's got great prospects. But another thing influencing my decision is I'm based in Queensland and I already got real estate holdings there, so I'm looking to diversify into a city where I don't own anything. So that's part of the reason, and so the answer does to a certain degree depend on your circumstances. I think both cities have options, good options to buy well, good rental returns for growth, but my personal choice right now is Adelaide. And there again, somebody working on my behalf has very kindly put up the information about the top 5 Adelaide Hotspots report and the link there. So if you're interested, please click on that and I'll take you through to how you get a copy of that report. There are plenty of other options. I've been doing a lot of strategy sessions with people who took advantage of our end of financial year special offer on that, and I've been talking about different markets around the country which suit the circumstances of various people. There's lots of options to buy affordably in markets with prospects for growth. Brisbane has some of them, Adelaide has some of them. I think Perth's recovering. Beyond the capital cities, lots of regional markets with good prospects. Regional Victoria has a number of growth markets like Ballarat and Bendigo right now. The Latrobe Valley towns seem to be coming into a more positive phase and are very, very affordable. Some cheap buying there, good rental yields worth considering. Many of the regional centres of New South Wales have growth markets very different to Sydney. They're on their own cycle, not just following Sydney. In fact, they're on a completely different cycle to Sydney, many of them. So certainly locations in regional New South Wales worth considering. Not far from where I'm based in southeast Queensland is the Sunshine Coast, and that's a market that's very strong evolving economy at the moment, and some of the real estate markets there have had major price uplift in the last 12 months. And then there are other parts of Queensland which are coming back quite well after a period of downturn led by regional cities like Mackay. So yeah, there's no shortage of options right now for people looking for places to invest affordably with good rental returns, prospects for growth. We're just not hearing about them in mainstream media because they continue to obsess over the 2 biggest cities and ignore the reality that even though they're 2 very big cities, the vast majority of Australians don't live in Sydney and Melbourne. They live in other parts of Australia, and when they're reading in mainstream media about the Australian property market prices falling everywhere, they wonder what the hell journalists are writing about and talking about, because it's not happening in their backyards. A lot of Australians living in locations where prices are actually been rising, while Sydney and Melbourne prices have been falling. But the twits who write for our major newspapers are either ignorant of that or they just don't care. So Adelaide is one of those places. All right, please type in your questions. I'm just flicking back through to see that I haven't missed anything that's come in so far. Okay, I just pulled out an article. Every day we're conducting our daily research effort at Hotspotting, and we're amongst other things we're tapping into media sources and various other internet sources, looking for information that gives us a clue to markets that might have the potential to be outperformers going forward. And an article that popped up in one of the real estate magazines that caught my eye because it's something that I've been talking about to people a lot. Somebody remarked during one of the strategy sessions that I did over the last couple of weeks that I talk a lot about locations where there's clusters of universities and hospitals. It's something that's quite common in our major cities and some of our regional cities as well, that the hospitals and the university campuses are very often close to one another. They cluster together because there's many natural synergies between the two types of institutions. And suburbs that are close to those sorts of precincts often have very good prospects. They certainly attract very strong rental demand because of their proximity to universities and major hospitals. And the article I'm referring to says that tertiary students are driving unprecedented demand for accommodation, particularly around major universities in Australia. That's according to a research report from property firm Knight Frank. It says that student numbers in Australia have increased 50% in the last 10 years. And partly as a response to that, in the last 4 years alone, 25,000 purpose-built student accommodation rooms have been built in Australia. It still hasn't catered for the current and predicted demand. So lots of new sort of purpose-built specialist student accommodation has been created, but according to the research report from Knight Frank, it's not enough to keep up with demand. Of course, not all students are seeking to live in those sort of purpose-built student accommodation buildings. Many are looking to rent in the general real estate market, and owning an investment property close to one of those university hospital clusters can often be one that attracts really high rental demand. You have the option of also renting say a 4-bedroom house out on a room-by-room basis, which is something that some people do to increase their rental returns. But referring back to Adelaide again, one of the precincts of Adelaide that I'm personally interested in, which I include in our reports on that market, is the local government area of Marion, which is a little bit sort of south-southwest of the Adelaide CBD, middle market area, and includes the Flinders University campus, and right next to it the Flinders Medical Precinct. And within walking distance of those two major institutions is the Tonsley Innovation Precinct. So it's just a cluster of institutions, very important hubs, the three of them: Flinders University, Flinders Medical Precinct, Tonsley Innovation Precinct, which generate a lot of economic activity, a lot of people going there every day to work, to study, whatever. And so nearby there's lots of demand for real estate, both as renting and for buying, good public transport, all sorts of things to recommend it. So that's an area that I think is worth focusing on. Okay. John is asking, what are your thoughts on the growth potential of the Brim Bank area over the next 5 years? Funny you should ask that question, John, because I mentioned we've just published today our top 5 Adelaide hotspots report. Last week we published the latest edition of our top 5 Melbourne hotspots report. And the area you refer to, John, the Brim Bank local government area, is actually included. We had to really work pretty hard to look at the Melbourne market to come up with hotspots because, as I'm sure you're aware, that market, generally speaking, has been trending down for the last, say, 18 months or so. Prior to that, for 4 or 5 years, it was really easy to publish a Melbourne top 5 hotspots report because there was was just growth happening across the metropolitan area. That's no longer the case. So we've revamped that report, and we've thought about the areas that have really good, solid credentials, taking a long-term view. And one of those areas that we included in the new edition of the Top 5 Melbourne Hotspots report, John, was the Brim Bank local government area, the out to in the western suburbs of Melbourne. And it again is one of those places, it just keeps popping up. It's got, I think, 2 university campuses and a major hospital. So again, it's that cluster of medical and educational facilities, which brings a lot of economic activity and rental demand and buying demand into an area. It's also got that new transport hub, which was part of the regional rail link. There's more of that to come. And the other thing that's happening out in that area, John, is there's a lot of urban renewal stuff happening whereby former industrial areas are being converted to residential as part of the growth. I mean, it's attracting buyers because it's relatively affordable. It's not that far from the centre of Melbourne. It's got good transport links, lots of jobs nodes out that way, university campuses, big hospital, all of that. All reasons for people to want to be buying in that area. And it's done quite well. It did quite well during the boom phase, extremely well. In fact, one of the areas that perhaps showed the greatest uptick in percentage term and prices. And we think that long term going forward, it's going to continue to show growth. There's new infrastructure and the planning, like the rail link out to the airport, that's going to provide further uplift to areas like that. So Linker is asking about Coolangatta. Yeah, I might just key that in, Linker, because generally speaking, Coolangatta, of course, is part of the Gold Coast market, and I always have a bit of a general warning for people about the Gold Coast market, but it primarily relates to the downtown high-rise glitzy suburbs like Surfers Paradise and Main Beach and Broad Beach, where they just lurch from one oversupply boom bust scenario to the next, and it tends to drag down the overall market. But Coolangatta is actually quite a long way from that. It's much further south, perhaps a market in its own right at the border with New South Wales, across the invisible border from Tweed Heads. And if we look at, it's interesting, one of the things about Surfers Paradise is that the median apartment price for Surfers Paradise today is basically no higher than it was 10 years ago. So there's been actually no growth in values as a general statement in that market. The median apartment price in Surfers Paradise is still sort of mid 300,000s, whereas Coolangatta, which you've just asked about, Linker, the median apartment price is almost 600,000, and it's grown, according to these figures from CoreLogic, 11% in the last 12 months. So it's a market that's perhaps a little bit divorced from that general syndrome I referred to earlier of the downtown mainstream beachside high-rise suburbs of the Gold Coast being places to avoid, because they just keep building mega towers. They usually build too many apartments, and it just drags down the potential for capital growth. Whereas Coolangatta, quite a long way south of there at the border, beside Tweed Heads, is a little market in its own right. And in terms of the apartment market there, which is, there's actually very few houses in Coolangatta. It's mainly about apartments. But it's been pretty solid. Solid performer over time. And in the last 12 months, according to these figures, median house price up 11%, and it's just a tick under 600,000. So pretty good values achieved for apartments in Coolangatta. Matt is asking, Sunshine Coast, highest internal migration rate in Australia, almost 30% gap between supply and demand. Well, I am a big fan of the Sunshine Coast, and it's not simply because I live near there. So it's, I just think the Sunshine Coast, I'm actually doing a major report on the Sunshine Coast for a client right now. And I'm really interested to be amidst that, because I think the Sunshine Coast is one of the most compelling and exciting economic stories anywhere in Australia. I mean, the evolution of the Sunshine Coast economy is really, it's something that people should be aware of, because it's very educational to look at what's happening on the Sunshine Coast economy, and then see the impact that we've seen in the last year or so on real estate values on the Sunshine Coast as a consequence of the evolution, or perhaps revolution, of the Sunshine Coast economy. It's been, for most of its history, a tourist economy, tourist economy is always a bit fragile and vulnerable to seasonal factors, economic headwinds. You really want to be investing in economies that are more diversified. Well, that's what's changed about the Sunshine Coast. It's actually through infrastructure spending and proactive action by the local council. It's changing a lot. There's now a vast medical precinct, a $5 billion medical precinct that wasn't there before. So a whole new industry has been created on the Sunshine Coast, and it's brought in a lot of new people, and some of them are pretty well paid, and they're buying top-end real estate, and so prices in places like Noosa have risen a lot in the last year or so. And we're really at the beginning of something, Matt, on the Sunshine Coast. It's there's a lot more to come. They're building the new CBD at Maroochydore. That's going to evolve over 10 or 20 years. The airport's being upgraded and is going international. There's the subsea cable coming in from Asia, which is I think it's called the Sunshine Coast International Broadband Network cable, which means that the Sunshine Coast is going to have the fastest internet connection to Asia anywhere in Australia. So that's a significant thing as well. And a whole lot more. They're spending $1 billion on the motorway alongside the Sunshine Coast right now. Much more to come. So all of that means that the Sunshine Coast market has been starting to be a little bit supercharged, and we're seeing some precincts of it, big price growth in the last 12 months. I think there's more to come. Okay, Serena saying, hubby has noticed that a lot of homes for sale in the Gold Coast suburbs, not Service Paradise, with descriptions that indicate vendors are motivated. A bubble bursting, you ask? Yeah, I don't think there ever really was a bubble. There was an expectation of a bubble because, as so often happens, we had the Commonwealth Games, and there was a lot of hype about that was going to precipitate a real estate boom. And I always said, well, no, I don't think that's the case. The impact of these sorts of events on real estate are always overrated and overstated, particularly by those who have vested interest. So in the lead up to the Commonwealth Games, there was a mini boom on the Gold Coast because of all the construction activity, the infrastructure that was taking place. A lot of it related directly to the Commonwealth Games. And so a lot of people were coming into the Gold Coast working on the construction projects. There was big demand for real estate. So there was a bit of an uplift then. But once the Games was over and all the infrastructure was no longer being built because it was finished, things just leveled off. And the Gold Coast, the post-Games boom that was predicted by those with a vested interest never happened. And the Gold Coast is just the market's just faded a bit. So, yeah, no surprises there. Very different on the Sunshine Coast. The Sunshine Coast is a strong market. But the Gold Coast, some parts of it done okay. I think if you're interested in the Gold Coast, you've got to avoid the high-rise beachside suburbs. That market, just stay out of it. There's nothing to be gained there, but some of the genuine residential markets of the Gold Coast have been solid performers and probably will continue to be. But yeah, avoid Surface Paradise and its near neighbours like the plague, I would suggest. Okay. Keep your questions rolling in. There's been some interesting ones. Mind you, we always get a good range of interesting questions about locations around the country, and tonight is no exception. Lenka, thank you for your thank you. Matt and Serena also. Nice to see your responses there. Hope that information was helpful. Matt, you were asking about the Sunshine Coast. I could be accused of being a little bit biased because I live in the Sunshine Coast hinterland, and I know the Sunshine Coast well. But a few years back, Sunshine Coast was included in our no-go zones report because it was at a time when it was a different set of circumstances on the Sunshine Coast, and we saw the potential for prices to fall in the short term, and that's exactly what happened. But much has changed through the process I just mentioned. It's about the infrastructure spend and the investment, the creation of new industries like the medical precinct, the fact that major businesses like UE Insurance have moved their national headquarters to the Sunshine Coast, those sorts of things. I think we're going to see more of that. When the airport is completed with the upgrade and it's international, that's going to have a big impact. The undersea internet cable linking to Asia and to the United States is going to be a huge influence, and more companies like UE Insurance will consider moving to the Sunshine Coast because it's going to be a serious player. It's currently I think the 10th largest city in Australia. It's going to continue climbing up the rankings. It's very much a place of innovation, and I think that reputation will grow, and more businesses are going to be interested in moving there, I think. So, Lenka again, I'm always keen on a house with a bit of land, not apartments. Am I right? Lenka, that's the sort of the dominant paradigm of real estate, isn't it? It's land content that's important. I think gradually as we go forward, that is changing. It may always be the case that land content is the thing to go for, but there is plenty of evidence that more and more buyers, there's demographic shifts suggesting more people are going for apartments. So as that trend gathers pace, the paradigm may change. So you've got young adults. Many young adults prefer apartments. They're not making the same choices that their parents made and their grandparents, which was to go out to the suburbs and buy a house on a quarter-acre block. They prefer perhaps to be closer into the inner city, living in apartments for lifestyle reasons, and it's also a little bit more affordable. So that's one demographic change that's significant. Then you've got downsizers, people approaching retirement or in their retirement years, no longer need to be in the 4-bedroom family home, so they're selling that and moving into a townhouse or an apartment. That's another major trend, and of course we've got that aging population, so that's a factor that's going to gather pace. And then you've got a lot of our population growth comes from overseas migrants, and many of them come from places where that apartment living style of living is a lot more prevalent than it is in Australia. So you've sort of got three major trends there, demographic trends pointing people more towards apartment, which is why over the last, say, 5 years, the building approval figures for new dwellings have been dominated by apartments. Developers building more apartments, answering in response to that that shift, that demographic shift to more people wanting to be in apartments. Having said all that, I think we're still going to have a situation where, in terms of capital growth, as a generalised statement, houses on land are probably going to continue to do better than apartments. But that's a general statement. There are always exceptions in individual situations, individual locations. There will be exceptions to that general overriding paradigm. Okay, Lisa is asking, do I have a view on the longer term prospects for Dubbo. Well, actually, Lisa, I've got an opinion on just about everywhere, and Dubbo is no exception. Dubbo is a location that I've always taken an interest in. I really like the Dubbos of this world. I'm just trying to find some up-to-date information. Right, here we go. Because they're so solid, I like regional Australia. It just offers a really viable and attractive alternative to investors. Not everywhere in regional Australia, obviously, but the better regional centres, and Dubbo is one of them, do offer a really valid alternative. And I call it a win-win-win situation if you buy in the right places. The first win is cheaper buying prices, obviously, compared to the big cities. The second win is much higher rental yields. And the third win is if you're buying in the right one at the right time, you're going to get some pretty good capital growth. Dubbo is just so solid. It's sort of place that's probably never going to boom, but it's probably never going to bust either. It's going to just keep on steadily growing. Very safe place to own real estate. It's got, it's a substantial regional city. It's well located, motor highways, rail links. It's got an airport. Got lots of diversity to its economy, and it's always growing, and it just keeps on steadily rising. So in the last, this is typical. The figures I've got in front of me, Lisa, the latest figures from CoreLogic for Dubbo. The median house price has risen 5% in the last 12 months. At a time when, say, Sydney has been dropping quite sharply, Dubbo's risen 5%. And that's in keeping with its long-term averages. Its long-term average over 10 years is an average annual growth rate of 5.1% per year. Typical rental yield for houses about 5%, a little bit higher for apartments. So, yeah, there's a lot to recommend to investors for a place like Dubbo that, particularly in the context of maybe a larger portfolio, it's nice to have a nice, safe, solid, affordable option like the Dubbos of this world, where you can buy. The median house price is now 370,000, median apartment price about 250,000. So very affordable. A lot of people can get into a market like that, get a decent rental return, which an investment might pay its own way. Doesn't cost you anything to own it, and it's just going to steadily keep chugging along, growing at 5 or 6% a year on average. Yeah, you could do a lot worse. Okay. How long have we been going? Almost an hour. It's amazing how time flies when the questions come in, and I get on a bit of a rave about some of these locations that I find interesting, like the Sunshine Coast, like Dubbo. As I said, I do have a bit of a soft spot for places like Dubbo. I mean, I love driving in regional Australia. Regional New South Wales is great to drive through, and to encounter substantial regional centres like Dubbo along the way. They're always interesting. They're vibrant, busy places, and pretty good option for people to consider for investment, particularly if you can't afford capital city prices. That's a really viable alternative. Okay, so just coming up for the hour. I usually go a bit longer than an hour, but I'm also mindful that some of you won't be interested, won't give a damn, but it is the semi-finals of the World Cup of Cricket, and the semi-final is on right now, and I might go and watch it unless someone's got some more questions for me about real estate. I almost prefer talking about real estate to watching a World Cup semi-final. So now's your chance. If you've got a question, don't delay, because otherwise I might go watch the cricket. Just while we're I've been talking about the Dubbos of this world. while we're on the subject, here we go. Just caught up another one, and that I've always been interested in regional New South Wales, the regional city of Orange. I think it's another great place to consider. Like Dubbo's, got a lot of diversity to its economy. It's always strong, always steady going forward. The last 12 months, its median house prices risen by more than 7%, and over 10 years, it's averaged, around, 4.5% to 5% per year. So yeah, median house prices now just a tick over 400,000, and apartments typically 275,000. Just another example. And typical rental yields around 5%. Another example of the options that are available in the regional areas of Australia. And just keep in mind, we do this suburb by suburb, town by town research, looking at prices. And last time we did it for regional New South Wales, what we found was that the vast majority of locations in regional New South Wales had rising prices, quite contrast to what's happening in Sydney. Something like, I think it was about 80% of the locations that we looked at in regional New South Wales had median prices that are higher than 12 months ago. And Orange is an example, it's up 7%. Dubbo, I just mentioned, is up 5% compared to 12 months ago. I'm just going to key in Bathurst because I'm pretty sure that's had some pretty good growth in the last 12 months. Bathurst is up 10% and its median price in the last 12 months. Now I can keep on going through regional New South Wales, calling up locations where we're going to get those sorts of results. So it's really worth being aware that mainstream media keeps telling us about prices falling everywhere. It's not true. They keep obsessing over Sydney and Melbourne, where prices are by and large falling, but you've got all these other options out there in regional Australia, good solid regional centres, affordable prices, and these markets are growing right now. So the questions are starting to turn to cricket. Helen, I'm happy to answer your questions about that. Dean and Peter, who's going to win the World Cup final? Yeah, I've sort of suspect it was going to be India, but Australia is definitely a chance. So is England, who'll be playing Australia on Thursday night. But I suppose if I had to put money on it, I'd go for India, I think. New Zealand's playing India in the semi-final right now. And according to Peter, New Zealand's struggling. Well, that doesn't surprise me. Kind of disappoints me because I'm originally from New Zealand and I'd like them to do well, but I don't expect them to win tonight. So I'm not going to be hugely disappointed. Any views on Fairfield in Melbourne? Well, yeah, I probably do. Let me just get it pinpointed location-wise. I've got a few thoughts, but I just want to be sure. Yeah, okay. So I mentioned, I don't know if you were listening, Peter, earlier when I talked about the new edition of Top 5 Melbourne Hotspots, which we published last week, and we really had to think hard about it because generally the Melbourne market's been trending down. So we had to take a long-term view and pick areas that we thought had been pretty resilient in the downturn and had good prospects for various reasons going forward. And one of those areas was the local government area of which Fairfield is part. That's Darebin, the Darebin local government area, including nearby suburbs like Northcote and Thornbury and heading up to Preston. And I just see really, really good potential in those suburbs, in that general market, that precinct. Not far from the centre of Melbourne, just markets that have grown in popularity, been gradually gentrified, have all sorts of colour and interesting things about them, good infrastructure, transport links, all of that. I just think going to do well in the long term. And let's just have a look at Fairfield. The current numbers for Fairfield. Yeah, well, it's dropped back quite a bit in the last 12 months. A lot of Melbourne has done that, but its long-term growth averages is probably what's more important. It's 7% a year, influenced by the growth of the last sort of 5 years, no doubt. Median house prices a bit over 1.1 million. Apartments sort of around 500,000. It's interesting. This is something we've seen a lot of in Melbourne and also in Sydney, and that is suburbs where the median house price has dropped quite a bit in the last 12 months, but the median apartment price is up. And it's quite a common factor in Melbourne, and Fairfield is one of those suburbs. Angela's asking what's happening with the mining town Moranbah. Well, last time I checked, it was entering a recovery phase. It's got a long way to come back, Angela, to get back to the former glory days, which it probably isn't going to, in terms of there was a time when the median house price in Moranbah was 750,000. That was back in the days when the local mining personnel were buying and renting in Moranbah, but prices got so ridiculously high that the mining company said, to hell with that, we're going to find a new and better way from their viewpoint to do it. So they built temporary accommodation camps, and so suddenly the demand disappeared from the Moranbah market, and the median house price dropped from 750,000 to 150,000. So it's now back on the way up, but it's got a long way to go. But in the last 12 months, the median house price has risen 10%, so it's now back up above 200,000. Rents have sort of risen a bit as well, so gross rental yields are above 8%. But it's, I wouldn't recommend sort of rushing out and buying there, because it's, it's basically a coal mining town, and so it's very volatile and it's risky. And there's a lot of people I've encountered over the last few years who own a house or houses. Some people bought more than one in Moranbah, and they've dropped a lot in value, and they have a major problem. So it's a market that you need to continue to be very careful about. But the short answer to your question, Angela, is that recovery is underway. Vacancies used to be above 10%, and they're now down below 3%, last time I remember looking. And we're starting to see the median house price and the rentals rising again. So recovery is underway. Lenka asking about, Dean agrees that India are a favourite to win the Cricket World Cup. Yeah, I certainly, my gut feel is that they're going to be very hard to stop. But yeah, I think Australia's got a pretty good chance. Got some very good players who tend to perform when it matters, like they did 4 years ago at the last Cricket World Cup. Lenka, what about Townsville? Well, Townsville, I've talked a bit about tonight about the Sunshine Coast, where the economy has been in a period of evolution through infrastructure spending. Townsville sort of has the potential to do a similar thing, but it's sort of 2 or 3 years behind Sunshine Coast in the process. There's well over $20 billion worth of investment on the books for Townsville and infrastructure and property development, all sorts of things. The new sports stadium's well under construction, but there's other things in the pipeline, one of which is a new water pipeline or a duplication of the existing one. That's a big project and an important one for water security in Townsville. But I think Townsville, once it all starts to happen, and it doesn't have to all happen, but when some of it starts to happen, Townsville is going to have a growth phase. It's been through a bit of a downturn in recent years, and it hasn't been helped by the recent floods. But I think Townsville can look forward to a growth phase that's coming up through infrastructure spending. And it is the capital of Northern Queensland. It's got lots of different aspects to its economy. It's a big government centre. It's got a big military economy, a big education economy. It's got manufacturing, links to the resources sector, tourism. an international airport, an export seaport, all of that. And I think it's got a big future. I spoke at an event up there, I think, I don't know, 6 months ago or so. The local people don't really believe it. I guess they're battered and bruised by years of downturn and the Clive Palmer debacle with the nickel refinery and all of that, which doesn't help confidence levels. But from the outside looking in, I can see that Townsville is going to have big things are going to happen once it all gets underway. Righto. Well, we've been going an hour and 10 minutes. We've answered a lot of questions. It might be an opportune time to call it quits for this time. Last chance, if you've got a question, you're sitting out there with your fingers poised over the keyboard, bang it in now, because I think it's probably a good time to say thanks and good night on another edition of the live Q&A, which we do once a month, usually on a Wednesday night, but this week it's a Tuesday night because I feel I can't compete tomorrow night with the State of Origin decider in Sydney, which a lot of people are going to be watching, probably more than will be watching me talk about real estate. Okay. Thanks everybody for your participation, your questions, and your feedback, your thank yous. It's been another good and interesting edition. Throughout the course of the night, we've talked about a couple of our recent reports, top 5 Adelaide, top 5 Melbourne. If you're interested in finding out where we're recommending in those markets, you can go to you can follow the link that's in front of you right now for Adelaide, or you can go to the Hotspotting website. We've got top 5 and top 10 reports that are national and also state-based and city-based, covering the major markets of the country. If you want to find out where we think the best places to invest for good returns and future growth. All right, that's it for now. We'll do it again roughly the same time next month. Don't forget, most Tuesday nights we also do Hotspot of the Week. I did that earlier tonight, focusing on a location in Adelaide. And later in the week, I will do another edition of the War on Misinformation. Righto, that's it for now. Thanks for your participation. Good to communicate with all of you. Bye for now.